Hello and welcome to the Humble Investor Bull Bear Market Report. It's for the May 7th of 2018. My name is Adam Straseske. And here is our agenda. We always start from a top-down approach. We get into the broad market readings and then this week's operating plan. So the first thing that we always want to know is we're in bull or bear market territory. Last month, for the month of April, the S&P 500 outpaced the MSCI All World ex-USA Index, and both of them greatly outpaced Treasuries by a substantial difference. So the S&P 500 is still in the lead right now on a 12-month rolling basis. Looks like the MSCI All World tried to catch up a little bit, couldn't do it into the close. So we're still focused on the S&P 500 and the U.S. markets over international markets right now. As far as correction risk, looks pretty good for the bulls coming into this week. We don't have any negative divergences or oversold or negative reversals that we can really see. You might be able to count this as a positive divergence. It's weak at best, but we are in the oversold right here. A little bit in the oversold, not very oversold. So this looks pretty good for the bulls coming in into this week, and if we can just get this continued price action to the pop to the upside, we might see a really quick test of the highs coming up in the next few weeks. And this is a weekly chart of the S&P 500. You can see we're still in this triangle or trading range right here. And last week the S&P was down 0.24%, basically a neutral week for the S&P 500. Went all the way down for the sell, tried to break out, couldn't do it. Bulls came back into the market and pulled it higher. So, we'll see. It's just this tight, we're still stuck in this tight trading range. And if we break to one side or the other and see some follow through, we could see that trend continue for some time to come now. And here's a look at our operating plan for the monthly trender and the weekly swings. We've got preferreds in U.S. large and U.S. growth for the monthly trender, and then here's a list of our weekly swings. We did get into global wind energy, and I don't have the chart on that one, but we did get into that, broke out to the upside, finished pretty strong for the week, and so we got involved in that. Here's a look at U.S. large cap and U.S. growth. You can see I've got the trading range outlined here again. Here's another look at that, and then here's the channel. So channel line's been broken, but I wouldn't say that it's been broken strongly. So we're still in this upward move in the U.S. market, and it looks good, looks all right. You can see people are talking about the volatility. I mean, we're up, and then just finally we see these corrections. So that's what we're looking at right now. Is this just a correction, or is this a possible larger top and move to the downside? Right now, just a correction. Here's a look at oil, up 2.38% for the week. Looks good for oil. We're still in the channel, and we've adjusted our stop up several times now. So nice bull bar last week. Would have liked it better if it would have closed on the high, but we'll take it. U.S. Treasuries up 0.3%. We had a buy signal or buy trigger come in. We did not take it. We're just really not that bullish on Treasuries right now. And like I've talked about in the past, if you look at the actual vehicle that we're trading, it's within this trading range and hasn't broke to the downside. So we're going to hold on to it. Hopefully we can get up to the top of the trading range, and we'll look at it getting out at break even or so. But right now we're not going to add anything to it. Australia up 0.97%, almost a percent. Looks pretty good for Australia right here. We've got one, wouldn't like to see a bear bar that early in the move up. And also concerned that we're at the top of the channel line here, and then the moving average looks like it's started to fail at that moving average. Don't know if it will, but good thing that we had an up week, and of course we've adjusted our stop up here at about 21.5 level. Brazil down 5.67%, by far my biggest disappointment. Really stoked about it right here. Back in late 2017 when we got in there and had a quick pullback, but then quickly rallied to the upside, and now we're just seeing the relentless bears, this tight bear channel. So we'll see if this was the last week until we can get a bull bar and then maybe possibly break out to the upside, but we have adjusted our stop up to take some risk off of the table. So we've got a stop right here in this this range right here, represented by this red bar. And here's the MSCI EAFE Value Index, down 0.6% for the week. Looks like a possible double top. Like it that they couldn't close below the previous week, but of course, we would have liked to see it pop to the upside past this looks like shorter term resistance level right here. So we'll see if this past couple of weeks was just a small bull flag, and if we can get some positive upside. Haven't adjusted the stop up yet on this one, and we have a second purchase range so far down here at this level. We don't have anything new to add to the positions this week, the monthly trend nor the weekly swings or scalps. We're done, and have a great week, and we'll talk to you next time.